What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting and the trading method we use can be implemented with any company that's publicly traded in the US stock market. Make sure you hit the like button if you enjoy this video. It really helps the channel grow. Thanks to those who continue to watch and continue to hit that thumbs up button. But also make sure you have the subscribe and notification bells hit as well, that way you're notified when we release our bonus content. The nightly and weekend videos, like tonight's video, we focus on identifying triggers and targets for trades ranging from scalps and intraday trades all the way to long-term swings or leap trades. So if you want a deeper dive into exactly how we set up our charts and the different color coding for the different time frames and the levels that we have on the charts, make sure to check out the bonus content on our YouTube page. For more information about the strat, which is the base of the charting and trading method we use, you can find more free information in the description of this video as well. So I encourage you to watch the full video because along with the triggers and targets, we give some pretty good insight on price action on all time frames. So let's go ahead and check out the agenda for today. We'll go ahead and recap today's price action. Then we'll zoom out like we always do to keep level set and look at the week, month, quarter, and year. And we will then zoom back in to set our 4-hour markers and the triggers and targets for Wednesday, October 29th. And we'll do a quick review of the triggers and targets for the week, month, quarter, and year. All right, so just looking at today's intraday action, we had, excuse me, we have on the chart here, oops, I brought it out of focus a little bit, there we go. At the bottom of the chart is the previous low day, 45.14. Towards the top of or almost at the top of the chart is the previous high day, 47.16. That's also basically the overnight high, which was 47.12, and the overnight low was 46.08. Now the other level that we'll mention out here is 45.49, which is the week flip. So as long as we are above that level, the week is green. If we go below that level, the week is red. And then we also have the opening print, so the first traded price of the day, and that's here at 46.14, basically at the middle of the page. So we can see we opened and we pushed up. We hit the 50% level of 2024, 46.79, this white dashed line that we've been talking about for a while. And it also coincides with the 138.2 fib extension from the range that we were in for the past 2 weeks, 2.5 weeks. So those levels, that level right there is a pretty solid level, and you can see we got a rejection off of it. But when we pushed through over the opening print, we got a bounce off of the overnight low. So showing strength there, right? If we would have pushed through the overnight low and continue to go down towards the week flip, then that would have been a sign of weakness there. But the bounce gives you a sign of strength. We pushed back up and got back over the opening print, but we did fall back through it again, and we got a second bounce off of the overnight low, but this time a slightly higher bounce, so we're getting a higher low here. And then we start to get the push up that we would have got. So here is where you could have bottom ticked it if you would have got in with the second bounce off of the overnight low. But then also it's about 10:30, so we take into account the longer time frame charts. And if we look at the 15-minute chart here, let's make this bigger so people on their phones can hopefully see this a little better. But we can see here at 10:30, we got a higher low on the 15. So we entered here as soon as we went above the high of the previous candle, right? So the push down for the 2 down initially, and then we got the green 3 or the bullish engulfing candle, which essentially triggers the higher low right here, right? Because we're going to a higher high at this point. So we entered calls here, got the push up to the previous high at day. It's also in line with this daily broadening formation, this orange solid line that's going diagonally up to the right here. And you can see we just pretty much rode it all morning, excuse me, into the afternoon. And, once we got the lower, would we get a lower? Oh, yeah, it was at the end of the day when we finally got the lower high, lower low after a lower high on the 15-minute, right? So we got the higher low right here, higher high, Now here we got the higher low is almost an equal low, but slightly higher low here. And then we got the lower high, but it was followed with the higher low. So at that point, we knew it was consolidation, but then we got a higher high. And then finally the lower high, again, considering consolidation here and just making sure that since we got the lower high, we went ahead and got out on the 2 down that locked in the lower high right before the day closed. So, not a whole lot of profit, but it was still a decent profit day, right? I mean, it wasn't a small move that we got. It was still a decent move, but it wasn't one of those big 10-15% days that SOXL can have. So from that perspective, it wasn't huge, but it was a nice solid day of profit. You could have left some runners. We took all of ours off of the board just with the rate decision being tomorrow. If we zoom out a little bit here and look at the 1 day. Get a cleaner chart here. We can see we're coming up against a couple of daily broadening formations, the weekly broadening formation, last year's 50% level. Market makers expected move high is right here, and you can see how momentum slowed down. We had the gap up, excuse me, consolidation action, actually slightly bearish day, but then a second gap up, and then we've got consolidation again. So could we have another just, gap up day to get us over these broadening formations? Possibly. We do have the gap up here from, 49 to 50. So that can act as a magnet for us to gap up. But we do have the rate decision tomorrow. So even if we do have a big push overnight, which, we're up pretty decently right now overnight, up 2%. It's about 93 cents that we're up right now. So we, if we do get the gap up tomorrow, or not the gap up, but the open up high in today, Wednesday, open up high in the range of Tuesday's price action and push up for the 2 up. It's not out of the realm of possibility. Again, market makers expect that the move can go a little bit higher, and again, we've got the gap up here, but momentum did slow down. So just in case we're going to get some type of pullback tomorrow, we do have a gap that's right here, and then another gap right here as well. So could those 2 gaps together act as more of a magnetic force than the 1 gap above? Quite possibly. So, we want to be ready for price action tomorrow. And again, it's not the end of the world. We're nowhere near a downtrend. We're hitting the top of this broadening formation that was made at the end of last week, or middle of last week. And, it's perfectly reasonable to see a pullback. Again, we popped above this 100% fib extension of the April to July bull flag. And so, do we come back and fill this gap and retest it as, support, as it was resistance before? Do we turn that resistance into support? Quite possibly, right? We may even, do that in the morning just because people may be taking risk off before the rate decision. And then, who knows? After we get the rate decision, things could take off again. What just all depends on what the decision is going to be. But we just wanted to take a little risk off the table today, so we just went ahead and closed out the positions that we opened today. Now we still have our calls for November and January. Looking to continue to manage the November calls. Ready to take profit here soon. If we get any real downside action, probably go ahead and just cut those and look for an entry into some December calls. We'll hold steady with our January calls right now. We did pick up some March calls, I guess it was a month or 2 ago now. Actually a month ago, at the quad, quad witching. So not, looking to sell those either. And then of course we've got our 27 and 28 contracts. So nowhere near close to selling those, but that's just how we're approaching the market at this particular time. Just a little bit of caution going into tomorrow, but we are in a nice uptrend. And so if things continue to push up, we'll continue to follow it in that direction. We'll get into our upside and downside targets here on the day here in a little bit. Let's go ahead and just look at the week chart for a second. And oops. We can see, we're clearly got the gap up on Monday. So we're 2 up on the week, nowhere close to going 2 down or I'm sorry, 3 at this point. We haven't even got back into last week's price action. So looking pretty bullish from a week perspective. I apologize for those on phone. I forget sometimes. Let me go ahead and make this bigger. But you can see we got, the this was the flag portion of the the bull flag from the April 7th low to July high, and then we've got the pullback here, the flag action. Now we've had the push up, creating, getting to the 100% fib extension and further now. So kind of in a, I don't want to say no man's land, but a land where we could see some more sideways action before we get the further push to the upside. But I do think there is more upside to be seen. There's not a whole lot as far as resistance in this area, other than last week's 50% level, and it's a level, it's a point of inflection, but it's not a true resistance level, right? So we could easily just push right through it. Let's go ahead and go to the month. And again, on the month, looking very bullish as well. We're in a two up situation. Nowhere close to being back within last month's price action. We again, that 50% level just keeps coming into play, but we do have this gap right here, so I wouldn't be surprised to see us fill it. Not necessarily this month, because this month is pretty much over, but going into next month, even if next month does end up being a bearish candle, a lot of times you'll get the initial push up before you get the push back down to give an upper wick. If it's going to turn into a inverted hammer, or just a red, solid red candle with the wick on top, I could easily see us going two up next month if we don't fill this gap by the end of this month. So again, very, very bullish from the month perspective. The chart I feel is the most bullish is the quarter, and you can see here it's because we did go one combo, two down, combo, two up, triggered here at this 36.15 level, and as long as we're above that level, the magnitude for that move is up here at 70.08. So again, not saying we're going to get there this month. I'm sorry, this quarter. May take a quarter, maybe take 2 more quarters to get to that level, but that is the magnitude for that move, as long as we're in force above 36.15. And then the year, we've talked about how we turned it around, coming from a 1 2 up 2 down situation. Let me clear this up a little bit. There we go. From a 1 2 up 2 down, we did go down. We didn't reach magnitude, meaning we got a higher low, and we've got a nice solid green candle here. So things are looking pretty bullish from the year perspective too. Looking to lean into a 2 down 2 up situation in 2026. Let's go ahead and zoom back in and set our 4-hour markers and our triggers and targets for Wednesday. We'll go ahead and look at things first from a scalping perspective, and right here on the chart, I've got the overnight high up here at 48. Excuse me. As of right now, the overnight high is 48. We've got the previous high day from Tuesday, which is 47.61. The overnight low, which is right now is 46.80, and previous low day. So of course, overnight high and overnight low could and probably will change overnight, at least one of them. But for right now, those are the levels that we have. So if we, do pull back from the highs overnight, and we end up opening, in yesterday's price action, let's go ahead and get the right tool out. Let's say price opens right here at 47.19. Then the general rules are higher lows at or above opening print. We want to look for calls targeting the previous high day and overnight high. If we get lower highs at or below the opening print, we want to look for puts targeting, in this case, it would be overnight low first and then previous low a day. So, again, if we open price here, we get a push up, we get a rejection off of previous high day and we pull back, but then we get a higher low above the opening price level, then we want to get into calls, and then first targeting previous high day. Obviously, that doesn't give us a lot of magnitude, depending on where the higher low occurs right here. So that the ultimate target for the scalp would be the overnight high, which at this time is 48. It could be higher by the time we open tomorrow. But then, in reverse, if we're looking, if we get price that opens here, when we push down to the downside, maybe we get a bounce off of overnight low, and then we get a push back up and then reject off of the opening print. We want to get into puts, of course, targeting overnight low, which again, not a lot of magnitude there. You can scale out if you want, of course, if you are in the money calls and multiple contracts. You can start to scale out there if you want it, depending on how good of an entry you get at or just below the opening print, if it is right there. But if this is not enough, then obviously the ultimate target for the scalp is the previous low a day, and we would be looking for that. Now, if price were to go, beyond previous low a day or beyond overnight high, of course, we would turn to our 4-hour triggers and targets, and then the 1-day triggers and targets, which we'll get into here in a minute. All right, so that's from the scalping perspective. Let's look at more of an intraday perspective. Day trade, maybe an overnight swing trade. Excuse me. Let me bring this and make it bigger. All right. So we can see here that from the 4-hour perspective, of course, we have the gap up from Friday, the gap up from Monday. Then we have the 2 up, the inside candle, then the higher low essentially here with the bullish engulfing candle, then another inside candle for the second half of Tuesday. We got a 4-hour broadening formation up here, so nothing really immediately above us as resistance. And we've got right now the 46.79 possibly turning into support, as we've intraday support at the very least, as we have pushed above it intraday, right? So could this low right here be the low of this inside action basically, and tomorrow does that continue to act as support and we get a push up or even just move sideways? That's a very good possibility. Now if we do get price action to the downside, if people are deleveraging before the rate decision and we get the push down, that would trigger at 46.90, and it would the magnitude for that move would be the low of the first 4-hour candle from Tuesday, that being 45.94. All right, so decent move for an intraday move, right? Again, it would be in the face of an uptrend, so you want to be careful of how far out your target is going to be. I would probably suggest cutting a majority of the position at the low of the first 4-hour candle from Tuesday. If you are going to leave runners, I would cut a majority of them here. We are also at this, these daily broadening formations. This weekly broadening formation is here as well. And if we fall back below this 46.79, that does stay as resistance. And so, maybe we do get the push down. But at least for right now, on an intraday trade, we've got a trigger here at the low of the second 4-hour candle from Tuesday and a target of the low of the second 4-hour candle from Tuesday. Now, if in reverse, if it goes to the upside, the trigger is the high of the second 4-hour candle from Tuesday, and then the magnitude is the high of the first 4-hour candle from Tuesday. So that's not a lot of magnitude there. And you would, of course, want to look for, we're in the uptrend, so continued momentum to push up towards that market maker's expected move high and possibly even into this gap. Now, again, we do have to take into account this 4-hour broadening formation. But again, it's just a 4-hour broadening formation. It's not something I would weigh as heavily as like a daily or weekly broadening formation. So we could just push straight through that, especially with the gap being right here. Now on the day perspective, if you want to look at, again, a full day trade or possibly even an overnight swing, we're looking at, take that off of there. We're looking at a 2 up, 2 down situation if we go to the downside, right? So if price goes below Tuesday's price, that being the trigger, the target for that move would be the low of Monday's candle. But then, of course, we've got the gap below. So we could see a full gap fill. We've talked about in the past how about intraday bounces can happen off of the half gap or halfway through the gap. So we'll keep that in mind as well when we go through our triggers and targets here. And then to the upside, we would have a 2 up continuation, just looking to continue to ride that momentum. And of course, targeting the market maker's expected move high and then the gap here, half gap, as targets on the way up. All right, so let's just go to our notes here and just look at the numbers. So again, for Wednesday, October 29th, there will be 42 trading days left in the year, and the close for Tuesday, October 28th was 46.96. We know that the week flips red at 45.49, so not too far away. But the month, the quarter, and the year don't flip red until quite a ways further down. So nowhere close to looking at full time frame continuity to the downside at this point. And we do know that the market maker's expected move was $5.38 based off of Friday's price action, Friday's close, which gave us a range of 48.51 to 37.75. Now, we do have those gaps above, like we talked about, not too far away, 48, basically 49 to 50, and then another one at 59, so a little bit further ways away on the upside. But to the downside, we do have a couple that are rather close, that being at the 45 and 43, basically, level. So do have to keep those in mind. So again, on the 4-hour chart, if we do go to the downside, that gives us the 3-1-2 down. Triggers at 46.90 with the magnitude of 45.94 and an extended target of 45.14, 44.65, which is the half gap, and then 44.16, which is the full gap fill or gap close. If we get priced to the upside, it's a 3-1-2 up, triggering at 47.61. With the magnitude of 48.51 and an extended target of 49.06. And then on the day chart, if we go 2 up, 2 down, that triggers at 45.94, and the magnitude of that move is 45.14, but that's the gap, or the top of the gap, and so we have the half gap of 44.65 and the full gap close of 44.16 on there as well, just because, again, we're in the face of an uptrend, so we want to temper our expectations for puts. The full move there could be to 45.80, but we want to have those intermediate levels there on the way down, just knowing we could flip at those levels. So don't be surprised if you were to see a bounce or just even sideways action at any of these levels. To the upside, we have a 2 up continuation, triggering at 47.61. Extended targets 47.97. We put that on there just because we would have to fight back through the downside action that we had in the second 4-hour candle on Tuesday. So it's not too far away in number, but we would be starting from the bottom of the 4-hour candle. So that's a decent target for at least the first part of the move. But then 48.79 and 50 flat, which is the gap close, would be our extended targets. I won't go back to the charts for the week, month, quarter, and year. Try and keep this video to a shorter time frame, shorter length, and we'll just go over the numbers here. So on the week, we've already triggered the 2 up, 2 up. We gapped up. It triggered at 44.16, and then we've reached the first target of 46.79. I don't know why I didn't cross that out. But we're looking for second targets of 48.79 and 50. I did say that I would put more further targets out on those, but I think I'm gonna wait till tomorrow just because today's price action was pretty muted. We're still a decent ways away. $3 move is what, 5-6% on SOXL. So I guess we could go ahead and put something out there. Let's take a look at the week chart real quick. Let's just do this on the fly. Let's go to our swing chart. Oops. And so that 138.2 fib extension on the range that we have here. Oops, let me just show it. This range that we have here. I'm sorry, what was that? Oh, the April, I'm sorry, that's the bull flag. We've been talking about that for a while. So 138.2 fib extension for the bull flag from the April low to July high is 51.91. So we'll go ahead and put that one on there. And then 54.42. We've got a daily broadening. We'll put a extended target of 54.42 as well. All right, so just in case we get past that 50 level, we've got a couple more extended targets for the month, and then I'm going to put those on the week as well, just in case the rate decision or something makes us go crazy tomorrow, right? We saw Nvidia go pretty nuts today. AMD hit another all-time high, so chips are definitely moving, tech's definitely moving, and we've got nothing but earnings and the rate decision ahead, so plenty of catalysts to push us to those levels. But anyways, we're 2 up, 2 up on the week, 2 up, 2 up on the month. We're in the 1 combo 2 down, combo 2 up on the quarter, as long as we're above that 36.15. So again, just pushing up to these 48.79, 50, 51.91, 54.42. We already had these levels on the quarter. I guess we could have just looked there instead of going back to the chart. But then again, the ultimate magnitude for the quarter is 70.08. So we're looking real good and real bullish from the quarter perspective, the month perspective, the week perspective, even the year. Like we talked about, it triggered the 1, 2 up, 2 down, but we've totally reversed it. Got a nice solid green hammer. So, those are the triggers and targets right now. I don't see us going to green 3 or bullish engulfing candle on the year, so I'm not going to go there on the year. But those are the triggers and targets from a scalping perspective all the way up through the quarter, and then again on the year we've just talked about how we've turned things around. So I hope everybody's enjoyed this video. Hope that jumping around at the end for those for the extended targets on the week didn't confuse anybody, but leaving the levels up here for you. Go ahead and pause it if you need to, or rewind if you need to. But again, I hope everybody enjoyed this video. It's a pleasure to put these together. Make sure you hit that like button. It really helps the channel grow again. So we didn't think that this channel was going to be even as big as it has got. We thought it was going to be quite niche, but I guess there's plenty of people out there that trade SOXL or are looking for a good trade. So SOXL would be a good trade if you're looking for that. And so I guess we are continuing to grow. So those thumbs up really help, and we appreciate everybody for continuing to tune in. So if you're watching this Tuesday night, make sure you're getting some good sleep. And if you're watching this Wednesday morning, we hope you got some great sleep last night, and where everybody's refreshed today or Monday, or I'm sorry, Wednesday, and ready for some more trading. Watch for that rate decision halfway through the day, and we've got our triggers and targets to both sides, so we're ready. Just trust yourself, trust your rules, follow the rules, and you should have a great day. So we look forward to seeing everybody out there trading.